Well, markets are set to close mixed this afternoon. The S&P 500 is slightly higher, while the Dow Jones has been dragged down by stocks such as IBM and Caterpillar. Now we're joined by Mark Newton of Grey Wolf Execution. Mark, we are early on in earnings season, but how would you characterise the quality of results so far?
I think a lot of people would agree that earnings have been lackluster thus far. That's not really much of a surprise, though, even though there are reduced expectations. We've seen a slow, steady deceleration in earnings really since the beginning of last year, and so it's a little bit of a concern because the indices have been range-bound, and all of us are wondering, what is it going to take at this point to carry us higher? Indices have gotten very overbought. We've seen a lot of sector rotation. But the earnings, I would say, this far have been, definitely not up to par.
Okay. Now, the sector rotation you talk about, we've seen this movement into utilities and tech stocks over the past few weeks. What does that tell us about investor sentiment?
Yeah, what's interesting is that even though the indices have been sideways, we've seen a really big movement in technology, tech hardware, and the semiconductor stocks. Also utilities, which obviously one of last year's biggest underperformers are now actually one of this year's best performing sectors, even though the markets have been stable. So, some of that has to do with interest rates, I think, and rates have pulled back, and that's helped some of the sectors that are closely tied to rates. Consumer discretionary, though, is interesting. That's one of the biggest sectors that was an outperformer last year that has since started to turn lower, and it was actually last week's worst performing sector. So you look at last year's best performing as all of a sudden, we're in that period of between November and February typically where some of the worst performing sectors start to do better and vice versa, but some of this can be attributed to retailing, and the earnings continue to come in lackluster, and we've seen the entire sector start to turn down on a relative basis, and so that's a little bit of a concern in the months ahead. It at least means that we probably are not going to see that same outperformance this year in discretionary like we saw last year.
Okay, and just finally, we've seen a pickup in commodities and commodity type stocks as well. Is that a clearer sign of better global confidence?
I think it's going to take some time. I mean, a lot of the commodities have been in bear market for the last 2 years, and emerging markets have been under pressure since last October. We saw the first sign of a little bit of stabilization in the last few days. Shanghai Composite jumped a big amount last night, and some of that is related to the PBOC starting to pump liquidity into the banking sector. I think that gives everyone a sense of comfort that the Chinese banking system is going to do their part to try to help put people at ease. But that's definitely helped emerging markets. You saw a big movement in the Aussie dollar along with the British pound, and so to some extent those are correlated well with commodities. You've seen big moves in WTI crude and also energy just in the last couple of days. So it's not all due to just it being cold here in the Northeast and seeing lots of snow. But those are all good signs, I think, going forward to think that there might be at least some type of stabilization and rise in emerging markets.
Okay, thank you, Mark. That was Mark Newton from Grey Wolf Execution, and I'm Jane Searle for TheStreet.